What are you looking forward to? This entire event about disruptive technologies. How is the bank looking to get involved here?
No, it was great to be back in Hong Kong with all the executive board and the board of directors for a full week of sessions. And now we are also hosting our 11th event here on disruptive technology and gathering 1,000 clients. And really at a pivotal moment for the sector. I think that we always saw a lot of innovations, particularly coming out of Asia, but now the acceleration is huge around AI, around robotics, and so we're looking forward to engage with clients.
Right, and I think you and I were just talking before we started here that, you know, people tend to overestimate in the short term how quickly things can change. But I think in this case, things are rather moving fairly quickly as far as this technology goes. How is your team looking at opportunities for the bank here, internal or external?
Yeah, it is fair to say that also this time probably there is an exaggeration of the estimation, but is going faster than what we saw in the past. But I'm pretty convinced that we are still underestimating the impact it will have over the long term. I think that for us is all about really preparing for the future. The biggest focus we have right now is how to make our processes more efficient on the back end, but also how can we help our client advisors serving their clients in a more effective and efficient way, our analysts to be more responsive to market changes. And, you know, one point is very important. Technology will help humans being better. And in banking, we will continue to see the emotional part, the EQ part of the equation playing also a very important role.
Right, and you know all of this is taking place, and I want to ask you a bit later on about the process and the updates on the integration, of course, of CS. I believe you're 9 of the 13 billion in. I think we'll get to that in a moment. Can I ask you though about maybe one of your favorite questions, which is about FINMA? And well, not to speculate, but where are conversations now? Let me give you the mic on that.
Well, I mean, there are no real conversations. There is a political process. I think that the regulatory authorities are part of this process. We have now a consultation process on the proposals of the Swiss government to make some changes to the regulatory framework. We do accept that there is a necessity to fine-tune many aspects of regulation in Switzerland, but on capital, I think the requirements that are proposed are excessive and they are not really targeted to address what happened at Credit Suisse. So we are engaged in the public debates, and in the next few quarters we will see some outcome of the political process.
My understanding is any new regulation will kick in about a year and a half, give or take. And you have, if in fact in its current form it does kick in that way, then the bank has a few years to then adjust. I guess my question is, does this really affect how you plan the business short term, given that this is a multi-year process anyway?
No, look, short term, we have been very, very focused in staying close to clients, in navigating a fairly challenging macroeconomic, geopolitical environment with also volatility and changes affecting our wealthy clients and our clients across the board, and institutional one as well. So we are very busy in finalizing the integration. And also, as we mentioned before, on AI and technology, preparing for the future. So, of course, this debate on regulation is a huge distraction that we try to minimize as much as we can from a client-facing standpoint of view and day-to-day.
I mean, speaking of your ability to deal with your clients, I think one of the things that you've mentioned before, that shrinking the bank is not something that you prefer. You know, that the franchise is Swiss-based, and your global franchise gives you that competitive advantage. The reason I frame it that way is I wonder, and risking oversimplifying a complex issue here, does the regulation in some way handicap the Swiss competitiveness when it comes to banking?
Well, of course, when you have a proposal that would see our bank having to hold 50% more capital than your competitors, then of course you would have an impact on that. But No, it's difficult for me to see a successful global organization that is very close to clients, that is very resilient and strong in terms of capital, embracing a strategy of shrinking as a good way to succeed in the future. So we are very focused to keep our global footprint. Diversification is a very important factor.
Right.
If you look at our franchises in the US, in Europe, and particularly in this region, they are a core strength. So we believe that international footprint and business diversification should be maintained going forward to really also respond to clients' demands.
And the message you would give to investors, clients, employees that hear this almost on a regular basis, concerns around the bank shrinking and whether or not that's fully under your control. What is the message that you're able to give at this point in time?
Well, I think that we and the board of directors and the executive board are very determined to continue to execute our successful strategy, and shrinking is not an option.
How about the headquarters, the conversation there?
No, but we want to continue to operate as a successful global bank based out of Switzerland. I think that we believe we can offer a lot to our Swiss clients and international clients by operating in this way, and we believe that we are also, through that, a good factor for the Swiss economy.
Right. The management committee and yourself wouldn't be doing the job if you weren't planning for Plan Bs or Plan Cs. And not to speculate, of course, but what are some of the worst case scenarios that have been gamed out in the event you need to start entertaining some of these options?
Well, the worst case scenario is quite clear. It's already on the table. So I think that one is a scenario that we will need to evaluate and understand, but is definitely too early to jump
right.
on commenting any potential scenario and what our responses will be. Of course, the requirements as they are very punitive and excessive, right. and therefore we would need to think about how to protect our shareholders and our stakeholders' interest.
Understood. And I think just to clarify that point, because in my head there are two things here. It's either you set aside more capital or the headquarter question. I know that's oversimplifying the equation here, but do I take it then that you would rather put up more capital than move the bank out of Switzerland?
No, I mean, look, our preferred option is to have a reasonable outcome of these regulatory changes that is addressing the true lessons learned from what happened at Credit Suisse, and not simplistic options. And we want to continue to operate out of Switzerland based on that kind of regime. So I think that this is our focus. This is where our energy goes, and we're not going to get distracted by further other debates.
Right. On that point, final question on this. Do you get a sense that regulators are open?
No, I think that regulators and the government have made their proposals. I think that now is up to the Parliament to go through the process in assessing how they want to tackle this. And so far we see that there is a willingness to debate the topic, and so we remain optimistic that something reasonable can be achieved.
The other big thing on your plate, among the many things I would imagine, the integration. I think you're, correct me if I'm wrong, 9 billion into the 13 billion in.
Yeah.
By the end of this year, where do you think that number goes?
Well, I think that we're going to, clearly the last 3 billion plus will probably get into 2026 as we complete the integration, because we are still migrating more than 1.2 million clients in Switzerland. 400,000 have been migrated. Another 500,000 clients will be migrated before year end. And the last chunk will be early next year. Only then we can switch off data centers, IT systems, duplication, because in Switzerland, contrary to this region, for example, or the US, we are still running two large banks. From an infrastructure standpoint of view, from a client-facing standpoint of view, it's already one bank.
Okay.
And so as 2026 will be the final year of the integration, and then from 2027 onwards, we will continue to focus on our future. UBS has 170 years of history, and so we are preparing also for that next chapters.
And the bank has been around through many cycles. I want to get your sense of this current macro environment. I mean, we went into this year with some expectations around how the macro environment would change, and then we had this flurry of tariffs and this back and forth, and now questions around how much the Fed can, in fact, lower interest rates. What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum. And, of course, also China may be impacted by high tariffs, but on the current assumptions, around 40%, considering also that the weighting of tariffs for exporter has changed. In 2017 was probably around 20% of the exports were going to the U.S. Now we are closer to 14%. Of course, when you look at machinery, autos, and technology, there is between 40 and 80%. But what's going on, for example, in this region, diversification, it's a very important topic. So you see Asian becoming much more, developing more into a diversified play. Same is going on for in Europe. The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs. And
is that still unclear at this point?
I think it's unclear because a lot of in anticipation of tariffs, a lot of people have been exporting and anticipating and the exports or imports from the rest of the world into the U.S. So the kind of tariffs we see right now, which is 7-8 times higher than what we had at the beginning of the years. I mean, if you look at Europe at 15%, and is 7 times higher than what it was. The dollar also depreciating 10% has a big effect on the economy. So it's going to be challenging for Europe. In the U.S., we still believe that growth will be there, but the inflation questions and how it plays out into the central bank policies remains open.
Well, when you speak to your big corporate clients, do you get a sense that people are more conservative still in terms of their assumptions, their capex spending, and just their broad expectations of how things will play out?
Well, I think that there is still a level of uncertainty, although if you look at the world seems to be divided into two, the more traditional, let's call it, economy, and the one that is AI, technology-driven. There is a clear boom and prospect for growth. We see it here in Hong Kong with the booming IPO market. This is something that we saw in the best times.
Right.
But in general, there is a constructive momentum, but the jury's out because the complexity is not only the economics, it's also the very complex geopolitical environment. Is keeping all of us very focused on making sure that we are not becoming complacent.
Well, speaking of this booming IPO market, it's something we haven't seen in years, let's put it that way. At least our team as well feels extremely busy every day. There seems to be a deal of fundraising, a stock rights offering, what have you, almost on a daily basis. Are you satisfied with how your deals team has come up to the task of this boom in activity here in this part of the world?
Absolutely. I mean, it's extraordinary to see. I mean, if this is a tenfold, 7-8 times higher volumes that we had at this point in time last year. I'm very happy. We are one of the leaders with more than 10% market share. Very happy to see that momentum. But it's quite impressive to see how the mood has changed compared to a year ago. And so it's which shows the flexibility and the agility of the economy in this region to respond and react to market changes and the driving force of innovation that stays behind it.
Right. And there's this renewed, let's put it, healthy competition coming from some of your Chinese peers in the industry. Do you get a sense that the competition now is a bit is a bit more fierce, and how are you prepared to respond to all? How is UBS prepared to respond to this this new regime?
Well, I don't remember in my career times in which competition wasn't fierce, look, I think that it's good to see that also Chinese securities firms and banks are broadening up their capabilities. We see us as a complementary player in that sense. So we are helping international investors that wants to invest in China and in Asia, and also the other way around. And this is very complementary with the rest of the industry and the competitive landscape.